Hello, this is Ernest Burley, your certified financial planner professional, your chartered financial consultant, your NFLPA registered player financial advisor, your investment advisor representative. I hold the Series 6, 63, and 7 that allow me to offer securities products to clients all across the country. I'm your author of two books on Money Management Easy as 1, 2, 3, and Money Management from Grade School to Grad School. These books are being used in various states to teach financial planning principles, money management principles, and also insurance concepts to children, youth, and adults. So, hey, go to Amazon. That's where my books are located, Amazon, and buy them by the caseload, please, and give them as gifts. Use them in churches. Some churches use them during with their financial freedom programs and things of that nature. So, do that, or at work or school or what have you. My books are being used in various capacities in those regards. So I appreciate those who are already doing it. I ask the others to continue to do it, and those who have not to start. Okay, thank you very much. I'm also a licensed insurance agent with over 30 years of experience in the industry, and I've been in business for over 25 years, helping clients all across the country, from the north to the south, from the east to the west. So state lines don't restrict or confine Burley Insurance and Financial Services from helping people in the financial services arena and also the insurance arena. So I focus mainly on wealth management, so investing, IRAs, 401k plans, managed portfolios, things of that nature. Also, rollovers. I do a lot of rollovers. I'm in the process of doing some right now, as a matter of fact. So when people retire, rolling over their retirement plans to manage the assets for them. Asset protection, so protecting what people have accumulated, and also asset growth, so strategically trying to grow those assets to meet the overall financial plan. Financial planning, whether it be comprehensive financial planning or basic financial planning, consultations, insurance, all different types of insurance, life insurance, long-term care insurance, auto, home, business, boat, furs, investment properties, contractors, professional liability, churches, and on and on and on, all different types of insurance policies. I've been doing a lot of those here lately also, because people are inquiring a lot about, as a matter of fact, what we're going to talk about today on the podcast. Also, athlete management. So on the NFL side, I'm an NFLPA registered player financial advisor. And on the NBA side, I'm an NBPA certified player agent. The purpose of this podcast is to educate, to enlighten, and empower you with clear, objective, um, concise information that can help you and your family make good decisions. Your church members, your family members, your coworkers, whoever you're connected to try to help out with some good information so you can make some good decisions for your, whether, some entrepreneurs too, for your business or what have you, business, family, friends, church members, co-workers, etc. Okay. So that's the purpose of the podcast. Hopefully you get something out of it to that extent. All right. So today's podcast is titled Three Plans in One, the Trifecta. Three plans in one, the trifecta. Right. So I've been receiving quite a few inquiries this year. I mean, we just started the year and I've received several inquiries about securing long-term care protection. Clients want to know how they can protect themselves. So, to receive the quality of care they desire if something like that unfortunately happens. Also to go where they want if something like that unfortunate happens, right? So would they want to be in a facility, a nice facility that they can pay for, or do they want to be in their home? And also flexibility and options, right? So when you have um, things in place, it gives you better planning tools and more options and flexibility to get the things you desire and want. Okay. In addition to protecting themselves, they want to protect their families, of course. The emotional burden is going to be there. So you can't really um, alleviate the emotional burdens that's going to be there if that type situation arises. Someone needs some type of long-term care services, but you want to try to alleviate the financial burden as much as possible. So that's what clients want to do. Also, they want to also protect their assets, so themselves, their family, their assets, so that people don't have to like drain all their assets to pay for that type of service, because it costs somewhere around at least $6,000 or $7,000 a month now. And I've had clients pay way more than that, normally like $8,000 or $10,000 a month for those types of services for a loved one, for a spouse, or um, for um, a sibling, or what have you. Okay. So that's the gist of the situation. People don't want to be a financial burden, and they want flexibility and the options if something like that were to occur, um, to take care of themselves, right? So leaving this gap unaddressed is a big drain, a financial drain on the family, on the assets. It's just not a good thing to do. So here are two practical and feasible ways to fill the gap. Either you can get a standalone long-term care policy, and a lot of companies have gotten out of their industries because just imagine the potential payout. A company paying I have one client paying $10,000 a month for her dad in a nursing home. So it can get costly. I've even seen it higher than that. So a lot of long-term care companies have gotten out of writing long-term care policies, but that's an advantage that I have. I'm very glad to have this advantage, is that I still know several companies that will write that plan, right? So there are several companies that still will write a long-term care policy. Excuse me. So there we go. You can get a standalone long-term care policy, or you can get a life insurance policy that has a long-term care rider attached to it. So there are companies out there. A lot of life companies don't have that, but there are several life insurance companies that do have that product, that you can get life insurance with the long-term care rider attached to it. Now, the long-term care policy, the standalone policy, is mainly focused on just the long-term care benefit. That's it. It's kind of single focused. For the most part, it's just focused on, paying that long-term care benefit for the client. Now, the long-term care with life insurance, well, the life insurance policy with long-term care rider attached to it has multiple twists to it, right, to benefit the client. So it's more than just single focus, mono focus, right? It has various benefits that can help a client out, and that's why I call it the trifecta, because there are three main key benefits to having a life insurance policy with a long-term care rider attached to it. And it depends on the person. My goal is always to do what's in the best interest of the client. So sometimes the standalone plan is the best option for the client. Sometimes it's the most economically feasible one, or sometimes that's all the person wants and that's what they get. Versus sometimes the life insurance policy with the long-term care rider is the more economically feasible one. And even if that's all the person wants is long-term care coverage, if it's more economically feasible to get the life with long-term care rider, then that's probably the way we want to go, right? Because I want to do what's in the client's best interest, what's most economically feasible, what meets their goals. So it just depends. It depends on the age of the person, kind of benefit they want, all that kind of good stuff. Okay, so here we go. Here's why I call the life insurance policy with long-term care rider, the long-term care rider, the trifecta, right? Because here are the three key ways. Try three, right? The three key things that I call the trifecta in the life insurance with long-term care policy. The first one is it provides life insurance, right? So if not if, when you pass, it pays the benefit, right? It's a life insurance policy, so it pays that benefit less any usage of the policy. So if you use part of the long-term care benefit, it's going to reduce that face value of the policy by the amount that you've used in long-term care benefits. So here's an example. Say, for instance, say you had a $500,000 policy and you use $100,000 of it for long-term care services. It will pay your beneficiaries when you pass 400,000 minus 100,000, no, 500,000 minus 100,000. So it will pay a net of $400,000 to your beneficiaries. Oh, pretty simple, right? So that's one. It's a life insurance policy that will actually pay out a life insurance benefit or a death benefit. Point number two is it will pay long-term care services too. So if you need long-term care services, it will use the face value of the policy. It will pay it on a monthly basis. So these plans come like in a percentage. So you get 2% or 4% or 8% of the face value of the policy. That's the way they normally go. So say if you have a $500,000 policy with a 2% benefit, that means $10,000 per month will be paid to you as a long-term care benefit if you need those services. So that's point number two of the trifecta, right? Second point is it will provide long-term care services, not services, but will pay for long-term care services if those services are necessary and needed. And the third part of the trifecta is it has a cash value. The plans that I recommend for clients actually have a cash value to them. So that's nothing to sneeze at, right? So in addition to it being a life insurance policy and having long-term care benefits attached to it, it also has a cash value built into it. So you can use that cash value throughout the duration of the policy. And that's what kind of bowls a lot of people over, because some people don't like to pay for insurance because they're like, I'm not going to get anything out of it, blah blah blah. That's really not the way you should think about insurance. Ideally, you don't want anything to happen because insurance means something adverse has happened to you normally, right? Auto insurance, you get into a car accident, someone steals your car, the auto insurance company kicks in. Your homeowner's insurance, the wind blows the roof off, you have a fire, water damage. So ideally, you don't want stuff to happen. You don't want your policy to kick in, right? Now, unfortunately, all of us are going to pass. So life insurance, hey, that is what it is. So it is eventually going to pay out if you continue to pay the premium and have the right policy. So the benefit here is a lot of people, if they can get some type of benefit out of it without something adverse happening to them, then they want that. And with policies that have a cash value, that's what you have. So two benefits to the cash value is that you can use the cash value throughout the duration of the policy, right? Or if you decide, hey, I don't want this policy anymore, it's 5, 8, 10, 15 years down the line, you don't want it anymore, you can cancel the policy and they will send you a check for the applicable cash value in the policy, right? So that's why I call it the trifecta: life insurance, long-term care insurance, and also cash value that you can use during the duration of the policy. And also, if you decide to terminate the policy, you don't want it anymore, the applicable cash value will be sent to you. So there you go. That's what a lot of people want. Some people want a return of premium type policy because they want something. They want to know that something is going to come back to them eventually. So that fits that person. So there you go. I don't want to beat the dead horse, but there you go. Though that's why I call it the trifecta, right? Life insurance, long-term care insurance, and also a cash value that can be used throughout the duration of the policy. And also, if you decide to terminate or cancel the policy, surrender the policy, that's what it's called in the life insurance lingo. Whatever the cash value is in there, you will have it, right? And it's not like the cash value increases every year. It's not like you'll have to guess what the cash value is, because there's an actual illustration that shows what the guaranteed cash value is every year. And of course, the guarantees are based on the financial strength of the life insurance company, right? So there you go. That's it. Hey, I want to thank you guys for listening in like you do every week. And I have like a ton of podcasts on my YouTube channel. So please go to my YouTube channel, Ernest Burley Jr. It's just my name. Click around in there. I have everything from like real estate to infinite banking. I talk about tax breaks and whether you should buy a car or lease a car, whether you should be renting versus owning a home, how to increase your credit score. So I have a wide array of different topics on my YouTube channel that are in podcast form. So I ask that you view and subscribe. So you view, like, and subscribe, view, like, and subscribe. Those are keywords in the social media industry, right? So I would like for you to do that, please. And spread the podcast to others. Like, go to YouTube and copy the link, email it to other people and say, hey, check out this guy's YouTube channel, all his podcasts on there. And I'm sure it's something that they'd be interested in. So I ask that you forward it to your friends, family members, church members, co-workers, employers, anyone that you're acquainted to, and ask them to do the same, to forward it to others, right? There you go. If you want to connect with me, very easy to do. My email address is my first name at my full name.com. So Ernest at ernestburleyjr.com. You can reach out to me through my website. That's ernestburleyjr.com or ernestburley.com. My phone number is 301-262-2600. And my website also has a lot of great information on it. So you can click around in there and get some good information off my website also. And I think that is it for the information that I want to share with you, except for my disclosure. I have to give my disclosure. I'm going to do this a little different today. I'm just going to hold it up, save myself a few minutes here and save you a few minutes as opposed to me reading it. I'm going to hold it up so you can read it yourself. So there's my disclosure, okay? There you go. You can see all of it. I'm gonna hold it up there for 5, 4, 3, 2, 1. That's plenty of time for you to read it, or you can pause and read it, right? And that's it for today's podcast. I thank y'all for coming out. I really appreciate you, and I ask that you spread the word, spread the podcast, try to get that YouTube channel viral, and have everyone viewing, liking, subscribing, etc. Okay. Until next time, hey, y'all be safe out there, and y'all take care. Okay. Bye bye.